So that's sure there's a 10% position there. Where's your next hold level after you pull? Right here, right? There's another big move there. Where's your next hold level after that? And you know, you start going into bigger time frames, right? So and then your next one is right here, right? Like there's a scalp right there. Like so these hold level scalps, they exist everywhere. Right? Actually, this one would be right here because it's an origin breakout, right? Like that would have had to break out of its current piece of its move. So this would have been actually the appropriate level, but nevertheless, there might have been actually an even more appropriate hourly level, which there wasn't as a hold level because that's way the heck up here. So actually the 15-minute origin is correct here. You go down to the 5-minute, and what does it show you? It's actually the same thing, the 5-minute origin valley, right? Because now you're starting to become into this territory here, like this in the green box instead of you know, these sides of the legs right here, which is just trying to hold the current spectrum of the move. So yeah, I don't really think. Oh, that's not right. It was more like this. Yeah, which I don't really think the volume matters. I think more so understanding that if KMD goes on a 50% run, it's going to have a large bounce because it's going to go up very quickly, and the next hold level is going to be way the hell down somewhere, right? It's going to be way down at the bottom of the pit, right? Like you see, TNT would be, again, I'm going to go back to TNT for a minute. This would be a fantastic example would be in TNT. Like, look at this move on TNT right here. So like, where's the bottom of the pit here? The bottom of the pit is like, you could start at here at 452. And actually, I want to see when it moved up to like 800 actually. Here, when it moves up to 800, like this has a stupid run. So it has stupidly low hold levels, right? So then you start to look back at this registry back here at these hold levels, and you could even start right here as your first pullback, and that actually does get hit. So then you'd want to be moving more inside of here somewhere, which is fine now. So now you're just going to move into this origin hold right here, which is perfect. And if you got really greedy, you could have, and we're going to move in on this thing. Right, you have kind of this origin hold here, this breakout valley, because this was the breakout valley, which again, that's going to be like a pretty indicative of a strong part of the move versus buying this right here, right? And after that, right there, the next part of the leg will be here, but that's already tested. This is kind of an untested hold already. So either one of these that you buy. So you had a pretty stupid, you know, like a 40% bounce just because the bottom of the pit is just so far away, and that's just over the course of a few hours. You had like a 40-minute bounce because you identified like the valley that broke it out, right? Like the backside of that, this right here, right? You were just patient and you bought, right? You had two options to buy here. You had this side or this side. They're pretty much the same thing in this case, but anyways, regardless, so fine. You bought this one, it held, and it took a 40% bounce in what, 22 to 15. So 2 hours and 15 minutes, you just made 40% on your account. Like the money comes, like the money is there in the markets to take. Like this is not rocket science. This is buying hold levels when you understand hold levels, right? Like this is, and then you could have just even identified this as the next buying opportunity. So let's just buy this on first bounce and see what happens. And nothing. It would have bounced, right? Scalp it. It bounces. It fails. You get a chance to exit in profits actually, but perfect entry is where it starts. Because if you bought here, this is like beyond perfect. This is not perfect entry in any case, right? Like, but this hold level, this untested hold level is like the perfect buy bounce. Even there, I think it's like a pretty decent little move. Actually, it looks like maybe a few percent even. Yeah, it's still 2%, and it fails, and it gives you a perfect chance to exit. Like perfect exit. When it doesn't back test this, it gives you exit and profits still. Even if it's 1%, it's still exit profits. But again, it's like volume doesn't matter because the volume is actually can be a good thing when there's low volume because it creates these big, like these big swings like this where you have these massive run ups. Like the bottom is like way the hell down there. So when the bottom is, when something goes from like 245 sats down here, when it breaks this ridiculous trend that it broke, when it goes from 245 sats all the way up to 800 and then drops back down to 400, like, yeah, it's going to bounce to 500. That's like relatively small considering the total size of things versus something like Seller that goes up, instead of going up like 300%, it went up 30%. So then it has a 3 to 4% bounce. Well, that's relative, like 30%, 3 to 4% bounce. 300%, what was this on you know, 226%. So like a 26% bounce, right? Like that's, and even it's like 40%, that's like relatively safe. Like that's, very, very normal. So I don't think volume matters. I think that's like a really good question. And I think that's why I'm spending so much time on it. I think that's a really good question. And people ask it all the time, like does volume matter in coins? It never matters in coins, because then with low volume it means big run-ups. And with big run-ups means big scalps after, right? And with big volume means lots of steady, stable movement up. So like it's all relevant to the type of move. There is no one answer that's dynamically appropriate or statically appropriate for every single coin. It's a dynamic answer with a dynamic solution, because it's the effect of what that means. It's not like, oh, it has low volume, stay away, or oh, it has low volume, it means it's going to pump. No, it means that it's a different type of move, and you have to understand the effects of what low volume means and the effects of what high volume means. High volume means there's going to be a ton of hold and break levels, because there's a ton of, like there's in link, there's just like a ton of this. So there's like endless amounts of opportunities to scalp. There's like endless hold level, 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 trend. Like it's just infinite. So there's like 50 opportunities to scalp, right? And then there's still opportunities to scalp on low cost coins, but the moves are much bigger because they move up faster, because the volume is lower. So they ramp up really quick when they ramp up. And then when they fall, they have bigger gaps, and then there's bigger profits to be made. So it's like, but you can also get liquidated harder on something like TNT, because it can move down very quick. Like KMD moved down like that. Like you wouldn't see Link drop 15% in 15 minutes, but KMD dropped like 30% in 30 minutes. Like it was ridiculous how fast KMD was dropping when we were watching it on stream. So you have to be, it's just adjust your trading and your expectations and what you're doing based on the volume and the type of move. I always stress the fact that it's like not one answer for everything. Our markets are extremely dynamic, because these decisions are made in the moment. Nobody can stop somebody from going and purchasing 50 Bitcoin of QKC. Nobody can stop the company, QKC. Like nobody can stop the company from making a news announcement, or Seller or NPXS. Nobody can stop Pundi from saying they have a partnership with Apple. Like nobody can foresee it. Nobody can stop it, but it's going to be timed appropriately to like bigger trends, right? Like if NPXS comes up with some two-year trend, all of a sudden there's a partnership. Like that was, like nobody can control something. So you just have to dynamically appropriate the type of move with your knowledge. There's no like solution or answer, but just rather to understand what it means, the volume means. So I have zero recommendation on minimum volume coin. My recommendation is to find your big trends and see where they're going to break, and then buy those trends and get out if they're failing, right? Like with Key was perfect. Key was perfect example of that. Like a lot of people in Key didn't exit Key when Key was trying to break this trend right here. It was picture perfect. Like you buy Key here at 41, it's trying to break trend. Bitcoin is showing recovery. It failed. Like actually in this moment, Bitcoin was pumping like crazy, but Key wasn't moving down. So it was like Key's going to move up. Like that's very common. Like something doesn't sell, and then Bitcoin, like everything else goes negative 20%, and one coin holds around 0%. The second, like, cause look, everything goes like this. Like Bitcoin's ramping like crazy, and everything is going down like 20%. Like everything is 20% in the gutter. That's what this whole piece was right here on Key. So when something holds like this, the second that Bitcoin hits its top and comes back down, all the alts start pumping. Had this done that in this moment, this would have pumped through and just, it would have been gone. But the distribution just continued. Bitcoin did stop ramping, and eventually too much pressure comes in, and eventually just the big sells come in. But like, here's the thing. It gave you the perfect chance to exit if you understood scalping properly. It gave you the perfect chance to exit back on Key, right? You just had to be patient, because this is going to have a bounce, right? Like they always have a bounce. Look, you fall here, you bounce up, right? Every time something falls, it bounces, regardless, like every single time. That's the way markets work. Every single time. It might be quick, but it bounces. Look, fall, bounce, fall, bounce, fall, bounce. How big the bounce is another thing. That's TA. That is not like a static answer either, right? Fall, bounce, fall, bounce. Like it's constant. This is how markets work. Always, 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 always. So this was like a perfect thing, I would say. Like like you buy trend breaks, and when they don't break, then fine, something like this happens. But like understand where the right exit is on that trade. Like if the bounce is like, this is where people get confused, is like, okay, it falls, it bounces to here, it keeps going down, it bounces to here, it keeps going down. You didn't realize that was the bounce, right? But this is like a ladder downtrend. The bounce wasn't up to here. Sometimes it is, but it wasn't in that moment. But that's where people get stuck, is it falls, it bounces, and they're like, oh, we're waiting for it to come up here, but really that was the top, and then they miss that sell, and then it distributes more. I gotta wait for the next bounce, and then it just comes to here. And so like they didn't understand that this was the top, and they didn't see the hold level that was suppressing it, or the trend, or the backside trend, or something. They didn't see either a trend that was suppressing it, or they didn't see, in this case, they wouldn't have seen the valley that started this would have been right here. So that means the inverse is one sat lower on these low sat coins. That means the inverse is right here, or more likely right here. So it inverse down, but it gave perfect exit, like 42 sats. You bought a 41 and you could exit at 41, even through distribution. So like I would say, like the recommendation for scalping, trend. Perfect entry first. Identify perfect entry on a coin you want to scalp. If it has high volume, fine. Identify perfect entry, because perfect entry will give you the opportunity to most times you'll be able to exit. You could sit there and scan the markets for perfect entry on 50 coins and just take one of them. Every single day, just take the best looking one, and you will always be guaranteed to like never really lose money, in a sense, if you can identify perfect entry and where to exit, or where you could re-exit after a bounce. So there's almost like a foolproof way to never lose money in the markets.
Hey everyone, how's it going? As you know, I'm now giving out some of this content for free that I was otherwise charging for the past little while. Yeah, drop a donation, subscribe to the channel, join Patreon. You'll get access to Discord. Great way. Lots of top level traders in there, people who are doing this for a career every single day. So go to Patreon, join a tier, get access to Discord. Go on Reddit, talk about future of trading, talk about the science of trading, talk about cotton candy, socials, everything you can. Let's help this thing grow. It's the way you guys can thank me for giving out this content for free that I was otherwise charging money for. So I'll leave a Bitcoin address on the screen. I'll leave the Patreon address on the screen. Just do something to help out. Okay, thanks guys. Take care.